Let's in fact cut across to RBI Governor Shaktikanta Das. He will be addressing the press conference in just a while. Remember, it was a speech that he made back in Washington in the month of April, where he called for out-of-the-box thinking, and that's exactly what he has done. Given the growth concerns, it's a 35 basis point rate cut that has come in this time around, even though the markets were expecting a 25 basis point rate cut, and the other view was perhaps if the RBI would go in for a 50 basis point rate cut, but 35 it is. RBI Governor Shaktikanta Das on your screens there, and will be addressing the press shortly on the
statement on part A, that is the matters covering the resolution of the MPC, and the part B, announcements on certain regulatory and developmental policy initiatives. The Monetary Policy Committee met on 5th, 6th and 7th August 2019 and deliberated over the evolving macroeconomic outlook against the backdrop of recent developments and incoming data. Today, the MPC voted unanimously to reduce the policy repo rate and to maintain the accommodative stance of monetary policy. As set out in the MPC's resolution, 4 members voted for a reduction in policy repo rate by 35 basis points, while 2 members voted to reduce the policy repo rate by 25 basis points. I take this opportunity to express my gratitude to the MPC members for their valuable and insightful discussions that culminated in the policy decision. I also wish to thank our teams in the Reserve Bank and express my appreciation for their hard work and dedication with which they supported the MPC's work. In reviewing global developments, the MPC noted that global economic activity had slowed down since its meeting in June in an environment rendered hostile by elevated trade tensions and geopolitical uncertainty. Reflecting subdued demand conditions, crude oil prices have fallen sharply since mid-May. On the other hand, gold prices have risen, propelled by increased safe haven demand. These developments exemplify the high uncertainty weighing on the outlook amidst rising downside risks to growth. Increasingly, central banks across the world are easing monetary policy, including through insurance rate reductions, and are committing to maintain accommodation in their policy stances. Meanwhile, inflation remained benign across major advanced economies, as well as in emerging market economies. Financial markets have turned volatile on the back of monetary policy stances of major central banks and the uncertainty generated by trade and geopolitical tensions. On domestic developments, the MPC observed that the southwest monsoon is rapidly catching up, with the cumulative rainfall being 6% below the long period average, and 25 of 36 subdivisions having received normal or excess rainfall as on 6th August 2019. The India Meteorological Department has forecast normal rainfall in August and September. Catch-up is also underway in the area sown under Kharif crops, which is now only 6.6% lower as on 2nd than a year ago. Industrial growth measured by Index of Industrial Production moderated in May, pulled down by manufacturing and mining. Electricity generation picked up on strong demand. The manufacturing PMI rose to 52.5 in July from 52.1 in June, underpinned by pickup in production, higher new orders, and optimism on future demand conditions. High-frequency indicators of services sector activity for May-June present a mixed picture. Indicators of rural and urban demand as well as construction activity weakened, whereas domestic air passenger traffic turned positive in June after 3 consecutive months of contraction. The services PMI expanded to 53.8 in July from 49.6 in June on increase in new business activity, new export orders, and employment. Retail inflation measured by year-on-year change in CPI edged up to 3.2% in June from 3% in April-May. Food inflation rose to 2.4% in June from 2% in May and 1.4% in April, while inflation in fuel and light group moderated. Excluding food and fuel, inflation remained unchanged after having fallen by 50 basis points to 4.2% from 4.6% in April. The softness in inflation in this category was broad-based. Inflation expectations of households moderated by 20 basis points for the 1 year ahead horizon. Merchandise exports contracted in June 2019. Imports also contracted. And as the fall in imports was larger than that of exports, the category was broad-based. Inflation expectations of households moderated by 20 basis points for the 1 year ahead horizon. Merchandise exports contracted in June 2019. Imports also contracted. And as the fall in imports was larger than that of exports, the trade deficit declined modestly during May-June on a year-on-year basis. On the financing side, net foreign direct investment flows moderated to $6.8 billion in April-May 2019 from $7.9 billion a year ago. Net foreign portfolio investment flows in the domestic capital market amounted to $2.3 billion during the current financial year so far, that is up to 5th of August, as against net outflows of $8.5 billion in the same period last year. India's foreign exchange reserves were at $429 billion on August 2nd, 2019, an increase of $16.1 billion over end March 2019. In view of these developments and considering that inflation for first quarter of 2019-20 was in alignment with its June projections, the MPC has retained its inflation projection at 3.1% for Q2 2019-20 and revised the projection for H2 2019-20 to 3.5% to 3.7% with 3.5% to 3.7% with risks evenly balanced, from 3.4 to 3.7% projected in June. CPI inflation for Q1 2021 has been projected at 3.6%. The MPC has revised downwards the projection of real GDP growth to 6.9% for 1920, and this consists of 5.8 to 6.6% for H1 1920 and 7.3 to 7.5% for H2, with risks somewhat tilted to the downside. This is against 7% which the MPC had projected in the earlier meeting in June. And at that time, the projection, as you would recall, was 6.4 to 6.7% for H1 and 7.2 to 7.5% for H2 of 1920, with risks evenly balanced. The downward adjustment in GDP growth projection was warranted by various high-frequency indicators pointing to weakening of both domestic and external demand conditions. On the other hand, the MPC was of the view that the impact of monetary policy easing since February 2019 is expected to support economic activity going forward. The MPC has voted for a policy rate reduction of 35 basis points instead of conventional 25 basis points. Let me explain the rationale underlying this action. Considering the evolving macroeconomic outlook, the Reserve Bank has been preemptive in its monetary policy actions and stance. Since February 2019, it has reduced the policy repo rate by a cumulative 75 basis points till today's meeting. In addition, it has changed the stance of policy from neutral to accommodative, which is effectively a further reduction in the policy rate since it takes rate increase off the table, while committing to either rate reductions or status quo going forward. Furthermore, sufficient liquidity has been provided to the system, resulting in overnight money market rates trading below the policy rate throughout July and August so far. In today's meeting, the MPC judged that with inflation projected to remain within target, addressing growth concerns by boosting aggregate demand, especially private investment, assumes the highest priority at this juncture. Against the backdrop of policy actions taken so far, the MPC felt that it is prudent to remain accommodative. While remaining consistent with inflation mandate, the MPC considered it necessary to calibrate the size of the policy repo rate cut to the dynamics of the situation. Accordingly, the MPC was of the view that the standard 25 basis points might prove to be inadequate in view of the evolving global under the circumstances. Now I shall turn to some of the developmental and regulatory policy measures that we have announced today in the areas of financial markets, payment and settlement systems, banking regulation, financial inclusion, and credit flow to NBFCs. As regards financial markets, the Reserve Bank has been making continuous efforts to develop the market for state development loans, SDLs, in both primary and secondary markets. In continuation of these efforts, it has been decided to introduce stripping or reconstitution facility of SDLs, that is state development loans, in consultation with the state governments. In order to enhance efficiency and soundness of the payment and settlement systems, several measures are proposed. First, the National Electronic Funds Transfer (NEFT) payment system operated by the Reserve Bank as a retail payment system will be made available on 24/7 basis from December 2019. This is expected to revolutionize the retail payment system of the country. Second, all categories of billers except prepaid recharges who provide for recurring bill payments will be permitted to participate in the Bharat Bill Payment System (BBPS), an interoperable platform for repetitive bill payments on a voluntary basis. Apart from digitization of cash-based bill payments, these segments would also benefit from the standardized bill payment experience of customers, centralized customer grievance redressal mechanism, prescribed customer grievance fee, and the like. Third, it has been decided to enable diversification of risk and encourage innovation and competition by offering on-tap authorization to entities desirous to function, operate, or provide platforms for Bharat Bill Payment Operating Unit, Trade Receivable Discounting System, that is the TRADES, and white label ATMs. Fourth, the Reserve Bank will also facilitate the creation of a central payment fraud registry for tracking payment system frauds. Participants in payment systems will be provided access to this registry for near real-time fraud monitoring. This aggregated fraud data will be published to disseminate information on the emerging risks. In the area of banking regulation, it has been decided to reduce the risk weight for consumer credit, including personal loans, but excluding credit card receivables, to 100% from 125% or higher. Over the last 1 year, the Reserve Bank has taken several measures to enhance credit flow to the non-banking financial companies, NBFC sector. Now, the details of these are given in the Statement on Development and Regulatory Policies, which has been uploaded in our website, copies of which have also been shared with you. In continuation of these efforts, 2 more measures are now being announced. First, it has been decided to raise a bank's exposure to a single NBFC to 20% of Tier 1 capital of the bank as a step towards harmonization of the counterparty exposure limit to a single NBFC with that of the general limit. Second, in order to augment flow of credit to priority sectors that contribute significantly to exports and employment, it has been decided to allow bank lending to registered NBFCs other than MFIs for on-lending to agriculture. Agriculture means only for investment loans up to 10 lakhs, micro and small enterprises up to 20 lakhs, and housing up to 20 lakhs per borrower, as against 10 lakhs in the case of housing, which is at present. All these will now be classified as priority sector lending. It will be remiss of me not to address issues relating to monetary policy transmission and liquidity management, which have been flagged for prioritized focus in previous statements on developmental and regulatory policies. I also appreciate that market participants and analysts will be looking forward to development in these spheres. With regard to monetary policy transmission, it may be recalled that an easing cycle of monetary policy commenced in February 2019 with a cumulative reduction in the policy rate by 75 basis points during February to June. The stance of monetary policy was changed from neutral to accommodative in the month of June. These policy impulses have been transmitted through financial markets fully. I repeat, these policy impulses have been transmitted through financial markets fully. The weighted average call money rate, WACR, has declined by 78 basis points, market repo rate by 73 basis points, and 10-year benchmark GSEC yield by 102 basis points. Banks, on the other hand, have reduced their interest rates on fresh rupee loans by only 29 basis points so far during February to June. Our interactions with various stakeholders, including both public and private sector banks, indicate that steps are being taken by them on an ongoing basis to progressively lower their interest rates so that the benefits of policy rate reductions are passed on to the economy. Accordingly, we expect higher transmission of monetary policy action and stance by the banks in the weeks and months ahead. On liquidity management, the system has experienced large surplus conditions since June. The Reserve Bank absorbed liquidity of rupees 51,710 crore in June, 1,30,931 crore in July, and 2,11,140 crore in August up to August 5th on a daily net average basis under LAF. 2 OMO purchase auctions amounting to 27,500 crore were conducted in June, thereby injecting durable liquidity into the system. The weighted average call money rate, WACR, the operating target of monetary policy, was aligned with the policy repo rate in June, but it traded below the policy repo rate on a daily average basis by 14 basis points in July and 17 basis points in August so far. As announced in the Statement of Developmental and Regulatory Policies on June 6th, the Reserve Bank constituted an internal working group to comprehensively review the existing liquidity management framework. The group has reached an advanced stage in its deliberations and its recommendations will be available shortly for public comments. Meanwhile, the Reserve Bank has injected a substantial amount of liquidity into the system through combination of instruments including the LAF, open market operations, and forex swaps. There is an abundance of liquidity in the system currently, warranting absorption of surpluses by the Reserve Bank. Surplus liquidity parked in the reverse repo window of Reserve Bank was almost rupees 2 lakh crore on 6th of August. The Reserve Bank is committed to ensuring that sufficient liquidity is available so that the needs of all productive sectors of economy are met. Towards this objective, the Reserve Bank will use its liquidity management instruments to ensure that the system's requirements of both day-to-day liquidity and durable liquidity are adequately provided. Thank you.
गवर्नर, आपने ये जो 35 बेसिस पॉइंट का रेट कट किया है, दुनिया में शायद पहली बार है। आपने जब अपना भाषण दिया था, उसको मैं जहाँ तक याद करता हूँ, आपने कहा था कि हम एक स्ट्रॉन्ग संकेत देना चाहते हैं। तो क्या ये संकेत है बैंक्स के लिए कि वो तेज़ी से रेट कट करें, और साथ ही क्या ये भी संकेत है कि आपके पास अब रेट कट करने की ज़्यादा जगह है, तो आगे हम और ऐसे ही रेट कट्स देखेंगे?
जी, आगे क्या होगा वो इनकमिंग डेटा के ऊपर डिपेंड करेगा। उसके बारे में मैं अभी कोई इंडिकेशन देना नहीं चाहूँगा, लेकिन एग्जाम्पल्स आर देयर, प्रेसिडेंट्स है, ऐसे नहीं है। एडवांस्ड इकोनॉमीज में जब रेट कट किया हुआ है पहले, तब 10 to 15 बेसिस पॉइंट्स रेट कट्स किया हुआ है पहले. इंक्रीज साइकिल में शायद किसी ने 35 बेसिस पॉइंट या नॉट मल्टीपल्स ऑफ 25 बेसिस पॉइंट्स शायद किसी ने नहीं किया है. तो ये मैंने जैसे एक्सप्लेन किया, जो इवॉल्विंग इकोनॉमिक सिचुएशन है, जो हमारा ग्रोथ का जो एमपीसी का जो असेसमेंट है अबाउट डिमांड कंडीशंस, इन्वेस्टमेंट कंडीशंस, एमपीसी के असेसमेंट के हिसाब से मैंने जैसे कहा कि 25% इनएडिक्वेट था, लेकिन उसके ऊपर आप करना चाहते हैं तो नेक्स्ट मल्टीपल 50 बेसिस पॉइंट्स शायद थोड़ा ज़्यादा हो जाता है, एक्सेसिव हो जाता. तो इसीलिए एक बैलेंस्ड कॉल लिया गया है. अभी इस मोमेंट में इकोनॉमी का रिक्वायरमेंट क्या है उसको मद्देनजर रखते हुए एमपीसी ने ये फैसला लिया है.
तो जैसे आपने कहा,
नहीं, एक प्लीज I'll just come. Yeah.
Just, once again, a very basic underlying question on growth. Now, I know, you've talked about the sectoral issues, etc., but growth has come off very, very steeply from 8% 4 quarters ago to now, 5.8% in the last quarter, maybe 5.6%. What is the RBI's underlying understanding of what is happening in the economy? People have talked about structural issues. You don't need me to tell you whether it's income growth, whether it's savings that is proving to be a structural impediment to growth. What is the basic analysis of what is hurting growth right now? Not sectoral, sir, but sort of the underlying issues.
No, as we have already stated in the MPC resolution, which is already put in the public domain, there is a demand and investment slowdown, both put together as, having a sort of a dampening effect on the growth. We have ourselves reduced our growth projection now to 6.9% with risks slightly to the downside. Now, to go into whether it's a structural or a cyclical or it is a momentary thing, that is an aspect which requires a deeper analysis. Our understanding is that at this point, it is perhaps a cyclical slowdown, not really a deep structural slowdown. But nonetheless, we have to recognize that there is room for certain structural reforms which need to be undertaken. But at this point of time, it would appear that it is a cyclical slowdown. And we are still working on it. I think the conclusions, it would be sort of, I mentioned it a little prematurely, but this is our understanding at this point of time.
And urban and rural demand are seeing a hit now, sir? Is it?
Yeah, both urban and rural demand. If you look at it, just to take some examples, urban demand, let's say rural demand in the form of two-wheelers or tractors, or urban demand in the case of symbolized by sales of passenger car, they have slowed down. So there is a slowdown, but we are of the view that it is perhaps counter-cyclical, and with adequate measures taken by all stakeholders. Reserve Bank on its part has done its part, and the government has initiated certain measures. For example, in NBFC sector, in the budget, they have announced a package for first loss guarantee up to 10% in the case of NBFCs. So therefore, I think with measures undertaken, and it should be, we can see, therefore, in our own projection also, we have said that in the last quarter, we expect the growth in the current year to be 7.5%.
Governor, where will that...
I'll just come. There was one question here, I'll then come. I'll
Governor,
come to
just
you.
to follow up to what you
I'll just come
right.
to you. There has to be some orderly, yeah.
Okay, Governor, thank you very much. Lata from CNBC. You have given... You said that 50 would still be excessive. But if you looked at the current inflation number at 3.1 and your current repo rate of 5.4, it is still a neutral real rate of 210 basis points. And even if I took the 1 year forward at 3.6 inflation and this 5.4, the difference is 170 to 180 basis points. So what is the real rate you are working with? Do you think that in a cutting cycle, the real rate should be lower, should move towards 125? What is the RBI's thinking? And I must squeeze in the other question, which is so important. What is the Reserve Bank's view on dollar bonds? Are you net for it, net against it?
See, on dollar bonds, I think I have said it earlier also in the press conference in Delhi immediately after our central board meeting, which was attended by the finance minister. We have conveyed our views internally to the government. RBI...
Public discussion, sir. Please, can you make your view public?
No, it's like this. The RBI and government, there are so many discussions which take place on various issues, and in this case, especially as the debt manager to the government, our government does consult and is consulting the Reserve Bank. We are conveying our views and we are discussing with the government internally. So for the moment, therefore, I would leave it like at that. I would not like to express my views on this issue this way or that way through the media. Let the discussion move as it is. And with regard to your question about real interest rate, let me say that this is not the time to look at real interest rates. Currently, our focus is to meet the output gaps. And there is also a gap in inflation. So currently, our focus is to meet the output, to fill up the output gaps. So therefore, that is what is now the determining factor with regard to the MPC's decision.
Governor, this is...
110 is a very
No, I mean, I have replied. So our focus is now on...
Even 35 is okay, 50 is excessive. I mean... why
Okay, I note your points, but our focus is now to fill the output gaps.
Governor, this is
I'll
Swati.
just come back. I think
Governor, it was just a follow-up to growth because, like you mentioned, your target has actually been revised slightly upwards for the second half of the year. Some of this on account of the base effect, which will also help our growth numbers. But where do you see the recovery being led from? And to that end, I mean, the RBI has been extremely accommodative. We've already seen 75 basis point rate cut, an additional 35 basis point rate cut. What more do we need to see for growth to, conclusively be improved, the growth picture? And also, if you could give us an idea of, on the transmission front, 29 basis points being passed on after 75 basis point cut since February. That's, abysmal at this point. What are the concerns of banks? How are they being addressed? And you did say that in the coming weeks and months, you're expecting some, transmission to go through. What gives you that confidence?
Now, we have had, I have had meetings with both public and private sector banks in two separate sittings. And the system is today also, if I can use the word, flushed with liquidity. I have given the numbers. That's right. So therefore, the rate cuts done by the RBI and the liquidity which we have injected, both have now started initiated the cycle of rate cuts so far as the fresh new loans from banks are concerned. We have a sense that there will be improvement. RBI is monitoring it regularly. And in future, whatever steps are required to sort of ensure faster transmission of rates, the RBI will not hesitate to take those steps. With regard to growth, let me mention that the combined impact of the government and the measures taken by the government and RBI, you have to see them together. Several measures, let me put it this way, several measures have been announced by the government in the budget and by various other ministries. My expectation, our expectation is, and I am saying it on the basis of our discussions and interaction with the government, that the government will take necessary further measures as may be required to deal with various issues. I heard the finance minister the other day commenting in the media, I think 2 days ago, that government will address sectoral issues also. And so that plus the RBI's decision to, cut the policy rates, keep the system in, to ensure a situation where the system is surplus with liquidity. I think the credit flow will now revive. And with the measures that we have taken today, it will give, it will augment the credit flow into the system. And so therefore, growth numbers will pick up. And let me say that the last quarter growth is by and large in alignment with what we had projected earlier. It's not as if we have increased that. It is by and large in alignment with what the MPC had projected in June. And so therefore, there is an element of base effect also, which comes to play in the second half, especially in the second half and more particularly in Q4 of this year. So therefore, the combined impact of all this gives the confidence that the growth will be better, and there is the base effect aspect also.
Governor Swati Khandelwal from Zee Business. While आप ये बोल रहे हैं कि liquidity है system में, when we talk to the market participants, थोड़ा इसमें discrepancy लगता है. Lending, as you said, is the need of the hour. Private sector lending, highest priority है, but वो नहीं हो पा रही. And as a follow-up from what my colleague just said, banks transmission एक बहुत बड़ा concern है, जिसको आपने address करने की बात कही है. But exactly how do you think it will pan out? और आपके हिसाब से क्या timelines है when you will actually start seeing the effect of whatever is being done to improve the system
and improve the condition that the economy is right now facing?
You see, the lending activity by banks वो उनके risk perception के ऊपर depend करता है और उसमें हम banks को ये नहीं कह सकते कि आप इसी borrower को lend करिए, किसको ना lend करिए, वो हम नहीं कह सकते हैं. As a regulator, we cannot say that. It is for banks to consider and examine individual loan applications, individual applications for credit, and give the loans. So far as RBI is concerned, we are providing an enabling situation where the bank should be able to ensure better credit flow. We have today, for example, reduced the risk weight for consumer loans. I mentioned that other than credit card outstanding, now we have reduced the risk weight for that. That also would facilitate greater flow of credit. NBFC sector, we have also said that priority sector lending the banks can now do through NBFCs in these sectors which I mentioned. That is investment loans in agriculture, MSME loans and housing loans up to certain limits. So therefore credit flow will pick up, and let us remember that the banks have just come out of the problem and the overhang of the NPA and other problems. They were experiencing continuous quarters of loss which they were incurring. Now I think some of them are turning around. So given the overall situation, our expectation is that the credit flow will improve in the coming weeks and months. Yes, please.
Governor, thank you. In a scenario where the MPC is a rate-setting body, but the governor still remains the interface between monetary and fiscal policy, is it incumbent on the governor to caution the government about excessive reliance on monetary policy? Because when you do that, it's like a bullock cart being driven by, one pulling ahead and the other not, for the simple reason that RBI's control over inflation is limited given the weightage of food and fuel. And as you said, financial markets, the pass-through has been much more rapid. So government GSEC yields have fallen much more. So there is a case for greater government flexibility also along with RBI. Otherwise, it will serve no purpose and inflation could again come back. So as the RBI's governor and friend, philosopher and guide to government, is it incumbent on the government to just caution the government, and have you done that?
No, I cannot claim to be the philosopher and guide of the government, but let me say that we have constant interaction with the government at very high levels, and we do convey our views on various issues. There was a question about the sovereign bond, sovereign bond the external borrowing in external sovereign bonds issue. There are other issues which you have mentioned. There is a constant interaction between the RBI and the government, and we do convey whatever we feel is required for the economy, whatever are our expectations from the economy, we do convey with the government. There is a very active interaction with the government which goes on. So you need not have any...
You don't feel too much is being demanded from the front of monetary policy?
Sorry?
Not too much is being demanded from
No, the decision
policy.
of the MPC is its own independent autonomous decision.
True, sir, but you are the person who conveys that decision, and while conveying the decision, it is not just 35 basis point cut. There is something more that you add. So are you adding that to the
It's for you to judge. Thank you. Sorry, I'll just come.
Sir, nobody worried about the
Gordon from
Just-
Economic Times.
Sorry?
Gordon from Economic Times.
Yes,
You cut the growth forecast and you have been maintaining that the cuts so far have been almost 100 basis points if one takes the liquidity measures as well as the shift in the stance. And despite that, there has been a demand slump. So what stopped you from going for 50 basis points cut now, and why would that be excessive? Why did the MPC think that 50 would be excessive when, despite your 100 basis points cut so far, that the demand has slumped?
You see, in policy making, there is something called you take a call. Now, when you take a call, there is something more than mere numbers. Numbers are important. Numbers are paramount. Our assessment of the incoming data, how we see the incoming data, we have given our projection for inflation, for growth. Similarly, for other areas also, we have an appreciation, we have an assessment of the incoming data. But finally, when you take the decision, there is something called, you need to take a call, which is a little beyond what is there just in the data. It's not just, it is something more. So therefore, the MPC in its considered opinion took the view that 35 basis points is adequate,
So
is
just wanted to
reasonable.
figure out what was that more that stopped you from going for 50 then?
You see, it's difficult to spell out. And if I say gut feeling, then you will interpret saying that RBI decides on the basis of gut feeling. It is not so. Let me say it is not on the basis of gut feeling. It is driven by data, a lot of discussion which takes place. And at this point of time, it was considered that 35 basis points is adequate. Now you tell me, if I counter this question with another question, why should it be 25? Why should it be 50? Why should multiples, what is so sacred about multiples of 25? I have articulated it earlier also. There is nothing sacred about 25 or multiples of 25. It has just become, it has just been adopted and it has become the convention. So therefore, when you do something little out of convention, too much should not be read into it. So it is a judgment call which the MPC has taken, and let me once again say that there is nothing sacrosanct about 25 or multiples thereof. MPC, in its considered opinion, thought 35 is adequate.
Governor Manojit from
I'll come back to you. Yeah.
Manojit from the Hindu, the rupee is under pressure once again, and given the outlook for oil prices and all, it could depreciate further. How the rupee movement, do you think the rupee movement going ahead could constrain RBI in its effort to push growth? With it tied hands down, how concerned you are?
You see, on the rupee, it will not be correct, it will not be appropriate for me to give some kind of a forward guidance. I will just repeat our stated policy of the RBI, that it is RBI's responsibility to manage volatility of the rupee. Any kind of indication or forward guidance.
So while projecting CPI, what is the assumption, rupee assumption that you have taken?
Michael, you would like to?
We take the prevailing exchange rate.
Use the mic.
Use the prevailing exchange rate, an average of. It's an average. It has to be of the relevant period.
Roughly, we take, as he said, about previous 2 weeks or so. We take the average. I'll just come back. Yeah, there was one question there. I'll come back.
Governor Shayan from Mint. So, while there's a lot of emphasis on transmission of rates, why hasn't the RBI yet mandated the external benchmarking, and why has it still been deferred after revealing it several months ago?
You see, we do recognize that the banks are coming out of their problem of NPS. Deposit growth has been slow. So administratively, we did not want to mandate it at that particular time. But as I mentioned little earlier, we are monitoring the situation, and RBI will take whatever steps are required to ensure better transmission. I have been, it's better to allow the market forces to play. Wherever regulatory interventions are required, the RBI will take necessary regulatory measures.
Is it off the table now, sir?
Sorry?
Is it off the table, the external benchmark?
No, I did not say it is off the table or on the table. I only had said earlier that the external benchmark, we are again having stakeholder consultation and we have put it into review. So, it is an option. All options are available to the Reserve Bank. So, we will take a considered call as and when the situation warrants. Yes.
So you've mentioned all the measures that you've taken for the NBFCs, but right now shadow banks or NBFCs have become a kind of bad word in the market. Nobody's going to them. They're saying they're still not able to raise money, and you've cut rates quite significantly. But despite that, they don't have access to funds at the cheaper rate, and we're opening up ECBs for them to some extent. But how soon do you think credit will actually start flowing to that sector? Because like you mentioned in the policy statement yourself, that a large part of the economy depends on this NBFC sector. So the entire change that we're talking of, growth couldn't come in without them reviving. So how soon do you think that will happen?
You see, let me say that even today, as we are talking here, there are NBFCs, a good part of NBFCs have strong balance sheets, and they are able to access the market for credit. I was looking at the commercial paper rates. There are today NBFCs with solid and better looking balance sheets which are able to access commercial paper, let's say for 3-month CP or 1-month CP. They are able to get it at rates which prevailed last year in July, that is last year in June or July, that is pre-ILFS. So they are able to access it at that rate. So credit flow is there. There are some NBFCs which are stressed because of various factors, and to them the credit flow has not happened. But then again, it is for banks to make their risk assessment and take their call. Yes, please.
Hi, sir. Bijoy from Cogensis. You spoke about the system being flush with liquidity. So at this point of time, there is a sense that the RBI is comfortable with a lot of action in the markets, even happening at the reverse repo rate. Is that a good reading of what the RBI is doing at this point? Also, does 35, as in you said it's a convention, but does 35 throw in more uncertainty into figuring out where the next move will come, whether it'll be a 15 or whether it'll be a 25 or whether it'll be a 35? Does it throw more uncertainty into the policy making mix? And I know I'm just pushing my luck here, but on currency manipulation, you had spoken out a few days ago at the IMF event. If you could use this forum to just speak out on the fact that bilaterally, if countries are going to tag each other as currency manipulators, what the fallout of that could be for emerging markets like us. Sorry, multiple.
No, I think on currency, I have already, articulated my views. All that I said is that it is necessary for a multilateral forum like IMF to play a more proactive role. And they have come out with a policy framework during the April 2019 spring meeting of the IMF. And I articulated that should become the, basis and the framework to deal with all these issues. As regards the current currency skirmish, if you can call it, it's between two other countries. It's not proper for me to comment on that. And what was the other thing?
The uncertainty.
No, there is no, I don't think there is any need for uncertainty. Even when you do a 25 basis point rate cut or a rate increase, the uncertainty still remains. Because no central bank, of course, there are advanced economies, they do it, but at least in RBI, it is difficult for us, it's not possible for us, given the kind of volatility we have, and we are subject to the volatility of crude prices, we are subject to the volatility of the US Fed stance, and we are subject to volatilities of, escalating trade tensions, geopolitical tensions. So it is not possible, it's very difficult for RBI to give a kind of, forward guidance about what is going to be the monetary policy in terms of rate increase or rate pause or rate cut. The only forward guidance that we are able to give is that our stance is now accommodative, which means that rate cut is off the table, rate increase is off the table, and I always say rate cut, the rate increase is off the table. And so that is what it means. And uncertainty can arise even if you do a 25 bips cut. Yes, you wanted to say.
I wanted to tell
I'll come back.
When we did a CNBC TV...
Sorry?
When we did the CNBC TV18 poll on expectations from the policy, everybody wanted to know whether you can give comfort on liquidity. So will there be durable liquidity up to 1% of NDTL? Any comfort. People looked for it. So I'm putting that request to you. A second question which I was wanting to know is, do you suspect that banks are cartelizing and therefore not passing on rate cuts? And finally, sir, NBFCs, there is a chance of one of them failing.
The two questions.
One, comfort on liquidity. Two, are banks cartelizing?
Banks cartelizing, let me be very clear, we don't have that sense at all. I think my colleagues will, vouch for me that we don't have that sense at all. There is no cartelization. Let us be clear on that. SBI has taken the lead, but